You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is Interview Tuesday. Once again, yes, our first Interview Tuesday here for the new year of 2021. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the aforementioned Options Insider Radio Network, welcoming you to our interview series here for the new year. Hopefully it's a good one, maybe a little bit less eventful, fingers crossed, than what we saw in 2020. Hope you and your family and everyone out there staying safe and happy and healthy in this interesting, shall we say, start to the new year. Of course, remember, if you like what you hear, this program, everything we do on the network, usually a couple of shows hitting you a day here on the network. Keep those reviews coming in your platform of choice. We saw a massive influx of new people over the course of the dramatic year that was 2020. Want to keep that ball rolling here in 2021. So keep those reviews coming. Keep those questions coming too. Maybe you have a suggestion for someone you'd like to see in the old hot seat on the Options Insider Radio program. Hit us up. We do love to hear from you guys. And let's see who we're hearing from on the old program today. We're kicking off the new year and our first Interview Tuesday with a newcomer to the show and indeed to the network. He is Mark Phillips, the CEO at Harvested Financial. Mark, welcome to the Options Insider Radio program.
Hey, thanks so much, Mark. Really great to be on here, and I am looking forward to talking options.
I have to say before we start, I like the tagline of your firm there. Derivatives are for everyone. You know, we have it beat into our brain so often. Everyone has to put out the characteristics and risks of standardized options, and the first line is pretty much options involve risk and not suitable for everyone. But I've been kind of pushing back against that of late and saying, you know what, they pretty much are for everyone who's investing in the market. If you can buy or sell a stock, you sure as hell can trade an option to do it and get paid for it. So I'm glad to see someone else is hopping on board that train, sir.
Oh, you are talking our mission. In many ways, the risk of a derivative position can be less risky than an actual stock. So there's so much fun stuff you can do with them, and that is our goal, is to bring the power of derivatives, down from up on high and behind all these walls of legalese to, support retail portfolios and help investors really achieve their goals with their investments.
I like it. Well, we'll get to that in a second. First, since you're a first timer here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the options and derivatives markets and how you found your way to starting Harvested Financial.
Yeah, absolutely. So I've been in the derivatives, specifically the options space, for as long as my career's gone. I started on the floor after my junior year of college. I saw the mania that was the Amex floor at that time and said, I have to do this. This is the coolest job ever. I love being on the floor. I don't care if I'm running around, getting lunch for people, messing up, salad orders for 10 different traders. This is the place for me. So as soon as I saw what the floor was like and what the potential was as a trader and, how vibrant and exciting these markets were, I was just hook, line, and sinker for this industry. So I started there, worked with the same firm my entire career before starting Harvested Financial. So I was at Group 1 Trading. They're one of the big options market makers out there. They're the DPM and the VIX. So sitting kind of as the market maker in the center of the activity, you see everything that's going on in the marketplace. You see where the flows are coming from. You're thinking about how to price the option. You're focused on execution and how to manage strategies and navigating the complexity of the market structure across all the different exchanges. So, being at a relatively small firm like that, you really got to touch all different angles of it and think about the risk management problems and think about how to manage trader problems and think about, all the different things that come with, running an options business and see it from the white hot core. And that was where, spent a long time working with them and slowly realizing, the power of derivatives, like I mentioned, and, what they can really bring to people's portfolios, and saw kind of how well served the institutional community was with derivative strategies and managed derivatives and access to selling volatility and exposure, in the form of structured products or, however the sort of high-end institutional community was served, that wasn't necessarily making its way down to your average investors. And that really, seeing the way all the markets were behaving and the potential of these strategies, I realized that there was a big opportunity for individual investors to have exposure to these options type strategies, whether that's as simple as a covered call. That can be a very powerful experience for an individual portfolio. So really spending all those years as a market maker and, really getting my hands dirty in the industry let me realize and, see kind of the potential for a product like Harvested Financial.
I have to admit, I like the name, even though it does imply a certain predilection for a certain strategy. So is it all premium writing all the time? Or, what are you guys up to over there at Harvested Financial?
No, very good question. And, I think we do believe in the existence of the volatility risk premium, that is a feature of the markets that is rewarded to the providers of, liquidity and insurance capital in the form of writing options and, being that sort of, the writer of that contract. So, we do believe in selling options. I think it's generally a pretty good strategy, but I think it's got to be extremely well risk managed. And that's another really core foundation of the types of strategies that we're putting on, is that it's meant to be a portfolio experience here, that, we're not going for those YOLO home runs or, selling those nickels and, hoping the steamroller doesn't come through. So while I do like the idea of harvesting, I actually really like the organic nature of it, because I actually think listed equity options are one of the most organic financial products out there. It's not necessarily just about writing options and selling them, that there are a lot of good strategies you can do with owning options too. But I think, it also harkens to this idea of systematically performing the strategies and systematically staying exposed to the value that options provide. That it's not necessarily just about that one option that you might sell, or, you're doing a covered call strategy. Sure, we can calculate the P&L of how that will perform and whatnot, but the real benefit of that from like a portfolio management experience is that regular exposure, that sort of persistent trade management. And, we feel that that's the value that we deliver to our clients in terms of managing the option strategies. Well, many people can understand, the value of them. When it comes down to it, executing them can also be a pain too. So systematic exposure and that continual harvesting of whatever exposure you're looking for is really what we seek to provide.
So let's talk about those strategies a little bit. Let's say I come to you at Harvested Financial and I'm a proverbial retail client. Let's say I have 20, 50 grand, whatever it is, 100 grand in my account, and I want some exposure to some options-oriented strategies. You mentioned the covered call. What other types of strategies can I explore and utilize over there at Harvested?
So on the stock-based side, a covered call is sort of like a stock management strategy. We, of course, offer the covered call. And, we're trying to make covered calls a lot more interesting again. Like, they sound vanilla, but it's pretty powerful. You can look at some of these names right now that are trading 130, 140 vol. That's a really interesting option writing scenario. So it's not just about the sort of staid old covered calls. It's finding the right balance there. So, we work with those covered calls. That's an integral part of sort of our stock folio strategies. But then collars are actually pretty common too. The idea of selling that covered call, but also buying the put with the proceeds from that call. So, we're working with a lot of clients who perhaps might have a very concentrated position, whether that's a concentrated position because they were clever enough to buy Tesla a year ago, or whether they're perhaps getting employee compensation in the form of RSUs, GSUs, any of this sort of restricted stock. That makes a great use case for a collar, and not having that kind of concentrated exposure in the form of both your employment and, your bonus is all sitting locked up in the value of this company. Put a collar around that, and that's a great zero cost way to manage your holdings there. So as vanilla as they sound, those strategies actually make up our bread and butter on the stock-based side.
Well, I have said it many times on our advisors option program. The collar is kind of the holy grail strategy for a lot of advisors out there. It sounds like you guys are utilizing it to full effect over there as well. You mentioned the dreaded, the much maligned, much beloved T word, aka Tesla. So can I come to you as your client and can I say I have a position in Tesla or whatever name it is? Can I bring my own effectively stock positions to you and have you guys, create collars around them? Do you have pre-established model portfolios perhaps on the SPY? How does it work?
Yeah, great question. So on the stock side, absolutely. That's something we work with all the time is, 8-catting over the stock, moving the stock, because of course for margining rules, you can't just sell calls in one account and have the stock in the other account. So, moving over the stock is definitely the way to handle that. But you're right that on the other side of things, maybe you don't necessarily have stock. Maybe you're just looking to get in. Maybe you're just looking to have some exposure to the options market in general. And, we are seeing clients come from the range of experience here. So some people absolutely know what they want to do. They want to sell the 5 delta out of the money call every third week. And that's great. We set up a system for that. That's the system we built. But then we're also hearing from a lot of people that they're hearing about the explosion in options volume. Gamma is on the front page of the Wall Street Journal these days. So, people are hearing about options everywhere. And we have plenty of, clients that are coming in looking for exactly those model portfolios that you're talking about. And so those are options only based strategies. And so they have varying degrees of sort of flavors of what you can get out of an options exposure. So, we've classified our 3 model portfolios along the lines of amplify, diversify, and protect. So options can help you turn up the gas on your portfolio. They can provide that leverage. They can provide that, short volatility, bullish tilt that, benefits from vol coming in, market shooting up. They can provide that sort of diversification benefit, acting as a sleeve in your portfolio that's going to generate income in neutral markets, provide a little bit of diversified, orthogonal returns to the sort of other sleeves you have in your portfolio. Or you can go all the way on the most conservative side and say, I want to use options for explicit protection and use that to explicitly say, my portfolio needs something that's going to offset the value of that equity when that equity goes down. So we do it on specific stocks, but then we also run a really interesting sort of macro hedging. We call it our vol ladder portfolio that, I can't help myself. I do have to dabble a little bit in some of the VIX options and get a little clever there. So offering some of that global macro hedging strategy too.
A lot of different flavors, it sounds like, for a lot of different people over there. You mentioned something, you talked about the covered call earlier, and you mentioned something on your website called the poor man's covered call, which I find interesting. You said earlier you want to make the covered call, the basic vanilla covered call, more interesting. So what, pray tell, is a poor man's covered call there?
The poor man's covered call, this is one of my beefs with whoever came up with the name of this strategy. And I've got one more that I don't particularly like either. But naming a strategy that's designed to make you money as the poor man's covered call, I don't know. I don't love that branding there. It's the same as a broken wing butterfly. Who wants to engage in a strategy that's called broken? But anyways, my beef with the name aside, I think the poor man's covered call is actually a great way to be capitally efficient about earning that, premium from selling the calls. And so whether you've rolled into that, we have clients that are, rolling into them by, buying at the money calls, and those become, successful deep in the money calls, starting to write calls against that, or whether you want to initiate it and instead of buying 100 shares of stock, you actually buy a deep delta option that's going to be significantly less capital outlay than you would if you had to buy the shares explicitly, but you use that deep option as the anchor to sell your calls against. So really what it looks like is a call spread where one leg of that call spread is very deep in the money and is going to behave much more, quote unquote, like stock. But it's a great way to be capital efficient about where you want to have your exposure. Of course, it takes on a little bit more risk. It is possible in a scenario that deep in the money call becomes an out of the money call, unlike stock, which can never really go out of the money. But it is a great way to be tactical about sort of keeping your exposure to the options market and this beautiful strategy that is the covered call.
It is a poorly named strategy, you're right. I've heard many different terms for it over the years. Our friend Brian on Options Playbook Radio, he calls it the fig leaf because you're partially covered. I've heard it called a synthetic covered call. A lot of different terms for it out there. But you're right, it is an interesting strategy, particularly maybe in times like these where maybe you don't want to load up on all the stock there as well. You mentioned collars earlier as well. There's obviously a lot of different ways you can establish your collars. Some folks like to go with meteor protection and then kind of a little bit of covered call just as a little bit of icing on the cake. Other folks go to elaborate lengths they go to try to make those collars pay for themselves. What is your process? What is your MO at Harvested when you're setting up collars?
Oh, you're really getting into the fun stuff here. So that even with the collar, exactly like you say, you can really start making some adjustments there. One of the ways I like to consider approaching it is instead of owning a put, maybe own a put spread. And use some of that to, provide that near-term buffer. Obviously that short put that you're going to be, or that put that you're going to be short a little bit further out does cap your protection down there, but it allows you to sell a slightly higher out of the money call and give yourself the benefit of a little bit more upside. One of the other things that we're seeing in the market right now that's just fascinating from sort of a modeling and options geeky perspective is the call skew. Particularly in a lot of these tech names that there's been so much activity buying the near the money, out of the money calls in a lot of these hot names that have just continued to run up. And that's creating a dynamic where you can actually sell the call for an asymmetric return compared to what you can buy the put for. So you get more upside than you would, than you're protecting for on the downside. So, we're not talking enormous amounts, but call it 12% on the upside versus 10% on the downside. So some of these tech names, because of that really interest in that upside skew, has raised the price of implied volatility such that you can sell the call for more than you can buy an equal amount of put coverage for. So that's a just really fascinating dynamic in the marketplace that's happening right now.
I wonder what names you could possibly be talking about there that would exhibit such lofty behavior. I have no idea what you could possibly be talking about out there. Now, just coming off the heels of 2020 here. First off, maybe before we even go any farther, when did you launch Harvested?
So Harvested got its registration from the SEC in August of last year. So, we spent a little bit of the summer preparing for all of this and, watching what was going on in the options market. And, we all know the numbers about how busy 2020 was. Overall, OCC cleared volume was up over 50%. But we're even more encouraged by the activity that we're seeing towards the end of the year, that November and December were continually setting record highs. And, I think we're going to continue to see more of that as more and more people become interested in the power that these strategies and securities can bring to their portfolios. So while I had the designs for Harvested before, the options market went crazy, I think this is only the kind of, tailwind that is, helping everyone understand and hear more and more about why options are interesting for their portfolio, because it's not necessarily an evident answer that why do I need options? Well, options are weapons of mass destruction, or they're behind this, complicated wall of options disclosure document that I have to sign. But really, I think as more and more people are trying them, getting their feet wet themselves, reading about them, thinking about them, hearing about them, I think that's a great tailwind for the whole industry.
So what was that like launching an options-oriented fund manager RIA in the middle of the most unprecedented, crazy, throw your adjective out there, probably applies year of 2020, Mark?
I honestly think it's great. And I think the interest that we've gotten and like the general buzz that's around options is nothing but great. And I think, in a lot of ways, like I'm seeing a lot of people go to, we know what brokerage a lot of the new traders are going to, right? But I think that's a great thing for people to learn how to trade an option. And in many ways, I'd rather have a client that has tried to do something themselves and tried to think about it a little bit and see what the potential is and come to that understanding. So I totally encourage people to go out, write that first covered call, buy your first call spread, buy a first put spread, and use that as a way to kind of feel that, because there's no better way to understand options than to actually trade them yourselves. You can talk about theta all day long in a textbook, but until you see your call going up and down in value because of the time passing, there's nothing like that experience.
And have you seen an interest in the services? Has there been a strong uptick? I mean, last year, obviously, a lot of explosion of volatility, a lot of downside, then a lot of upside. And that could equate to two things. People maybe think they need a little hedging, or maybe they think, hey, the market is back in bull mode. Maybe I don't need these options things. So what has the response been like so far over there at Harvested?
Overall, very positive. I think in many ways, like when assets explode in one direction, that's tough for everyone to sort of manage strategies. When you see, something like Bitcoin that's doing what it's doing, or what Tesla's been doing, all of these names that have just gone, totally parabolic, that's a little bit tough. I unfortunately have not discovered the magic key to go totally parabolic on a systematic basis here, full disclosure, but, that I think it's the interest that is really helpful, and it's the general zeitgeist that is more favoring options right now is only going to continue to provide interest here. And clients, are coming to us and saying, hey, I'm trading a little bit over here, but I want someone to, manage this on a more systematic basis. Or, hey, this is a pain to be here at 4:00 every day for expiration to roll my positions. Can you do that for me? So I think, that discovery of that is increasingly leading to more and more interest in the product.
And you mentioned the clients coming to you. What are they coming to you for these days? Is it, we're seeing a crazy tumultuous year last year. They expect the rally to continue, so they're looking for more upside, speculative-oriented strategies? Or are they coming to you saying, I'm a little spooked after the year that was last year. We're at all-time highs. I need some of those sexy zero-cost collars. What are you looking for these days, Mark?
Definitely hearing a lot more of the sort of, I don't know what's going on. And, potentially, whether that might mean adjusting, instead of selling 20 delta covered calls or 5% out of the money, maybe they're pulling that a little bit closer to the money, collecting a little more premium, giving up a little bit of that upside. But, there's definitely some trepidation out there in terms of the market, and particularly if you're sitting on shares that have really appreciated. I think that's where people really start to go, eesh, I don't know if I want to give this up. But then again, you also have people that, if they're a total fan of that name, if they're a total, bullish on America over the long term, we have a lot of people in our Amplify portfolio, and they're looking to keep on riding this because, that consistent exposure to the volatility and equity risk premium is a sliver of their portfolio that they're looking for. And, they're not in it for the ups and downs every day or week, but, having that kind of diversified exposure over time is the set it and forget it that they're looking for.
And you have something over there at Harvested called the recommendation engine. What is that? Can a client come in and it'll effectively give them stock selections and option strategies on that? Perhaps the optimal covered call to write or the optimal put to sell? What is the recommendation engine?
Exactly. So that is the crux of our sort of service is because we are registered as a digital advisor, meaning, instead of sitting down and having coffee and discussing your objectives, that all of that happens through the portal. And we went that way because people are logging in to do their banking at 11 o'clock at night from their phone while they're at the airport. Well, maybe not at the airport these days, but while they're, any which where other than in a traditional environment. And so having a digital platform that will allow them to find what strategy fits them and experiment with different options, see the perspective of, well, what if I sold the 2% out of the money versus the 5% out of the money, and finding that fit. Because, with a covered call, like one of the fears of doing a covered call for many investors is sort of that FOMO that, well, what happens if it were to go up? What if it goes through my short strike? And, what if I could have made, X amount instead? And, we like to think about that as aligning objectives, that the best investment strategy and what the recommendation engine tries to bring is aligning that client with the strategy that's going to let them sleep at night, that they understand their risk reward, and that they understand that that's a trade-off. The premium that you collect when you write that covered call isn't money out of the sky. It isn't free income or whatnot. It's a trade-off. It's a trade-off of certainty in the form of cash today for the uncertain potential upside that you gave up by writing that call. So, a lot of what we try to do with our technology is find the right strategy that's going to fit your objective, locking that value in, whether it's for the next year, whether it's just for the next month, or, generating some income in exchange for the potential upside, or, just maintaining that sleeve of exposure in your portfolio. So, really, and I think any advisor's objective is along these lines, is to find something that fits. And our recommendation engine is the technology that does that.
Well, Mark, unfortunately, that music means we've come to the end of our time here on our first Interview Tuesday for 2021. But before we go, perhaps you'd like to leave our audience a little bit of a hint, a little bit of a tease, what they can look forward to from you guys over there at Harvested Financial. Now is the time, sir. The floor is yours.
Yeah, Mark. Well, thanks so much for having me on. We've got a lot of exciting things coming here at Harvested. In the first quarter, we're going to be rolling out our mobile app, which is going to make things even easier for people to get involved. We continue to tweak our Find Your Strategy flow to just make that recommendation engine increasingly powerful and increasingly customized, and really let everyone dig into understanding exactly how that fits. So a lot of new developments here. And we are also exploring the crypto space and the options out there. So if you think equity options are a little bit out there, the Wild West is truly in the crypto space. So, we're continuing to find the products that our clients are asking for and deliver that kind of customized options experience for individuals in a single account that is as easy as set it and forget it.
Oh, so you're the one who bought all those January 36,000 calls in Bitcoin a few months ago and is now reaping the profits of a lifetime, sir. That was you, Mark. Now I understand.
Don't you remember I am the seller of options, so I am the one that is happily selling those 36,000 calls as people buy them from me today. So the really interesting product, but that continues to be a space that's going to be interesting to explore.
Well, Mark, if people want to learn more, maybe they want to kick the tires over there at Harvested for themselves, where should they go? What should they do?
If they go to harvestedfinancial.com, you can explore some of our model portfolios, take a look around, understand what we're talking about with strategy execution as a service, and then the sign-up flow is right there. So, it's a lot of steps. I know that the KYC AML requirements, are a burden to open an account, but once that is done, it is so easy. So if you go to harvestedfinancial.com/optionsinsider, we actually have a promo code for all of our listeners right here. So you will get $5 only for your first 3 months. So that's 50% off our typical management fee. You will get your first 3 months for only $5 if you use the promo code OptionsInsider.
Look at you. You came equipped to the promo code. Well done, sir. So check them out over there for yourselves, harvestedfinancial.com/optionsinsider. Take advantage of that, listeners. And, of course, I want to thank all of you out there for joining us on our first Interview Tuesday of the year here. Of course, a lot more to come throughout the week. We got Education Wednesday coming up tomorrow. Dan and I will be back at the grind there on Options Bootcamp. Brian will be back. Options Playbook Radio. Maybe we'll talk some poor man's covered calls, a.k.a. Fig Leaves, on the show. To tune in to find out. Of course, Thursday, you got Twifo and a second episode of the Option Block. And on Friday, it's Volviews time all the way back to next week. Another episode of Options Insider Radio.
This episode is sponsored by Demand Derivatives, a startup futures exchange and clearinghouse trading the world's major assets in a creative new way. You already trade on an exchange. Here is your chance to own one. Before they approach large strategic partners for funding, the pioneering team at Demand Derivatives launched a crowdfunding portal so that regular traders have the chance to buy shares. Learn more and become a part of this revolutionary fintech project now at demandderivatives.com/crowdfunding. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.